Joining in on the show right now, we have Vineeta Singh. She's the co-founder and CEO at Sugar Cosmetics. Good to have you on board, Vineeta. Thanks so much for taking time out. Let's start off by delving into the numbers then that you have delivered, because I remember it was in the month of November that the company said that you're on track to hit profitability by the end of the ongoing fiscal year. Are you on track?
Yeah. I'm wearing green. So I think that should give you a hint. So December is actually the first month that we've hit profitability, and we expect to continue that into Q4. Last year, our revenue grew about 89%, and we managed to reduce our EBITDA margin, loss margin by about 15%. To come down to, as you mentioned, about minus 14% EBITDA, which we aim to bring quite close to zero. With December being the first month that we're profitable, and Q4 also expecting to be a profitable quarter. And all of this while continuing to grow at a healthy 30% year on year.
Okay, so December was the first profitable quarter. Good for you. Hope that you build on that. And let's just talk about your margins. I know you said that they have improved, but just are there any concerns with respect to inflationary pressures hurting your margins down the line? Will that force you to take on any increase in prices and any SKUs?
Yeah. So our gross margin on FY23 over 22 actually improved from 69% to 72%. So we don't have gross margin pressure. We're a very healthy 72% gross margin business because we invest a lot in brand building, and the entire effort has been to catch up with the legacy brands through more efforts in brand building. And the idea of becoming profitable is really shaving off that extra that we spend in marketing. And since the business has a fundamentally higher gross margin, we're able to plow that back into EBITDA, and that is the plan. The inflationary pressure has seen demand being sluggish in Q1 and Q2 compared to the previous years. But Q3, which is the festive quarter, and whatever we are seeing in the first few days of Jan have been phenomenal. The market's really bounced back. Demand has bounced back. Irrational consumption in the festive period is back. So we're not seeing as much impact of the inflation-led sluggishness in demand in Q3 onwards.
Okay, good to know. Let's also get in a sense as to what the outlook is in terms of your overall expansion plans, because you're really ramping up your offline presence in a bid to grow faster. What is your current store count, and what is the expansion plan for the year and the next couple of years?
Sure. So we're available, Sugar Cosmetics is available in about 50,000 retail outlets. We have 200 of our own stores, and we expect to grow that to about 60,000 over the next 12 months. And we plan to continue having about 200 to 250 own stores as well. The own store equation works very well with our D2CR app, where we're able to reach 19,000 PIN codes from our warehouses. And that's where we're really differentiated compared to legacy brands, because we have a very short feedback cycle where we can innovate faster. We get very quick feedback because it's direct to consumer business in our own stores and on our app. And we're able to iterate on our product within 3 to 6 months, which a legacy brand would otherwise take 12 to 18 months to do.
Right. Now, you've also said that, once you hit that or come close to that 500 crore net revenue mark, which you are, of course, very close to doing, you will be optimizing your marketing. You will look at profitability closer now that that's been hit. What is the outlook in terms of what will really lead to that growth?
So there is still a lot of inorganic expansion left in terms of building distribution. As on date, the largest brand in our category is available in about 200,000 doors, and we're still in about 50,000 doors. So there is room to expand the number of towns that sugar products are available in terms of physical distribution, that is general trade. The other is, of course, expanding categories. So a few months back, we launched with Karina a brand called Quench, which is a skincare brand. So Color Cosmetics is a 10,000 crore market where sugar plays. And now Quench, which is a skincare brand in partnership with Kareena Kapoor Khan, is going to play in a 25,000 crore skincare market. and that opens up, opportunities to grow in terms of expanding categories beyond just color cosmetics. So these are the two things, I think, building on distribution and building on categories is where we see our future growth to come from.
When will that 500 crore revenue mark be hit?
Sorry, I missed the question.
When will you hit that 500 crore revenue mark?
Oh, we've already crossed 500 crore revenue in FY25, FY24, and we are expecting to close FY24 at a 500 plus crore net revenue.
Okay, good to know. And there is no doubt that there is a lot of competition within the space as well. I mean, be it the likes of Wow Skincare, a lot of small D2C players, Honasa, bigger players, well-established names that are in the market. So what's the strategy for you to stay relevant amongst this competition?
Yeah, I think the only way to stay relevant is actually be very close to the consumer and innovate faster than anybody else. We're very lucky to be the largest and the most followed brand on social media. So on Instagram, we have 2.8 million women who follow us. On YouTube, we have another 1.7 million women across categories, not just beauty, personal care, but across brands in India. We're the most followed brand on social media. And this allows us to have a very close understanding of where our consumer, especially Gen Z and next Gen Alpha, is going in terms of their preferences. And that allows us to innovate faster. And we feel that at the end of the day, in a very competitive market, the most important thing is getting execution right and having a very short feedback loop and innovating faster than your competitors, all of which we are doing. We also have our greatest strength has been the fact that we've understood that the way to win market share is through content and community. And we've really invested over the last 7 to 8 years in building that as a moat. So if you look at our community on Instagram, on YouTube, and our own app, they're very passionate about the brand. And it's very hard to build a community of more than 5 million women digitally in a short period of time. And we feel that as long as we're able to continue educating our consumers about beauty, personal care using through this community, we'll be able to stay ahead of our competition.
You've seen that a lot of companies that were listed, say, a year or two ago, that weren't on track with their profitability were met out by investors, who clearly expressed those concerns. You have been on, talking about your IPO plans. Will you now revisit those IPO plans? I know you've turned profitable in the December quarter, but would you like to further build on that before you decide to list? What's your timeline in your mind?
Yes, we're looking at about a 2 to 3 years timeline in terms of an IPO because it is important to have some solid track record of profitability in the bank before taking the company public. And this is also aligned well with our board because we had an aspiration that we should go into the market at 1,000 crore plus revenue plus profitability, and that's how we're expecting to look at.
Okay, fair enough. And given that, you also have the fact that is there's going to be any more fundraising rounds, because the last one that you had done, they were talking about valuations of 500 to 600 million. What will the valuations be? Any sort of indications that you can give us?
So the good thing about becoming profitable and also not having a lot getting invested in working capital every month is that we're really not looking at funding anytime soon. We will probably do a round before our IPO, but I don't think it's going to happen anytime soon because there is no urgency. We have a significant runway, and we are now profitable, so we are keeping on adding to that runway. And we've really done a lot of corrections in terms of working capital optimization as well to be not requiring a lot of cash going into the business as well. So the idea is to look at a fundraise probably just before the IPO. So maybe sometime over the next 12 to 18 months, but nothing in the near term horizon.
Fair enough. And your ad spends also shot up, and you spoke about that, 162 crore rupees. But do you think that, the overall rising ad spends will be a bit of a concern down the line?
So, like in Q1 and Q2, a lot of brands experienced the fact that it became pretty expensive to advertise on platforms, and the ad rates for performance marketing had really shot up. And so over like the last 12 to 18 months, we've taken a conscious call to reduce our dependence on performance marketing and increase our spends on brand marketing, which includes television, which includes the work that we do with our influencers and the content creation that we do. And over the next 12 months, we will continue reducing dependence on performance marketing and increasing our overall brand spends. And we feel that in the long run, the only way to get away from the pressure of rising CACs, which is customer acquisition cost, which all digital first brands have been experiencing over the last 12 months, the only way to get away from that is to really build brand awareness and make sure that distribution is omni-channel. And both of these we've been working on over the last 12 to 18 months. So I think we were quite prepared coming into this year about the fact that there will be pressure of ad spends going up to keep the revenue up because of the competition intensifying online, with legacy brands jumping in as well as new brands continuing to spend more. But the only way to beat that is really to not depend so much on performance marketing and really build brand awareness and just make sure that distribution is as widely available, which is hard for a brand to do in the first 2-3 years because you're really dependent on marketplaces and your own website for all your revenue. But once you're able to build distribution, then that dependence goes down. Almost 50% of our revenue actually now comes from offline, which is incredible because the offline part of the business doesn't depend at all on performance marketing. And that percentage will also continue going up over the next couple of years.
All right. Thank you for giving us clarity on your numbers and telling us where Sugar Cosmetics is headed. Hope to chat with you sooner, perhaps when we have more news and updates coming in, Vineeta.
Well, thanks a lot, Avan. Nice speaking to you.
All right.